or sketching out that particular chess.
Good morning and happy Friday to you. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. The World Health Organization has labeled the outbreak of the coronavirus as a local Chinese emergency. The Chinese Health Department confirms reporting of 830 cases so far, along with 25 deaths. Oil prices fall to the lowest since November over speculation that the coronavirus outbreak may dent demand. The PTI reports that the SEBI is likely to call for a forensic audit of the books of Infosys as it continues to probe whistleblower allegations against alleged financial irregularities. Spicejet Chairman Ajay Singh expects the Boeing 737 MAX to return to the fleet by mid-2020. He says this in an exclusive interview to BloombergQuint at Davos. And JSW Steel, along with UltraTech Cement, will be the two nifty companies reporting their third quarter numbers today. Let's talk about U.S. markets now. Thursday was another mixed day of trade for the U.S. markets as investors took heart from strong corporate earnings. The Dow Jones underperformed peers for the second straight day, while the S&P 500 and Nasdaq eked out minor gains. Abigail Doolittle of Bloomberg News tells you exactly what happened in that trading session on Wall Street in this report.
Thursday's Wall Street session turned out to be a bit topsy-turvy, with stocks starting off lower on the coronavirus fears, and then by the end of the day, very small moves, in fact, mixed moves, with both the S&P 500 and the Nasdaq finishing slightly higher, the Dow finishing down. The real big reversal on the day, though, happened for the Dow Transports at the lows. That transportation index down not just for a third day in a row, but down actually a fourth day in a row at that point, but also down more than 1%. By the end of the day, the Dow Transports up 1.3%. This on some strength for the airlines. JetBlue, American Airlines, and Southwest Airlines all reported earnings. Investors looking at that as opposed to fears that the coronavirus could really stop travel. That was not the case, though, for some of the other travel-related stocks, such as Carnival Cruise or Carnival Corp, the cruise ship operator. The third largest population of people who go on cruise ships is from China, so there's some fear that if travel continues to be clamped down there, it could really hurt the cruising business. So again, those shares down, and in fact down on the week. Now, relative to some of the other asset classes, it was more risk off. We had oil down 2%, in fact below its 200-day moving average. The case can be made that WTI crude is confirmed to go below toward or below $50 a barrel, and some are saying that this virus could really put a dent in demand if economic growth does slow to some degree in China. China is the world's largest user of natural resources. And haven assets also, they weren't down, they climbed. So we have stocks barely moving, mixed. We have oil, another risk asset, down sharply, down 2%, and then haven bonds and the yen both rallied. So overall, it seems as though investors and traders are somewhat cautious around the coronavirus situation. Some late day movers and post-market movers include Intel, up more than 7%. It looks like they put up a very solid fourth quarter. And Netflix, which had been down yesterday on its fourth quarter report, bouncing back on the day, up 7.2%. But again, overall, probably neutral to risk-off appetite for the financial markets in the U.S. in Thursday's Wall Street session. From New York, Abigail Doolittle, Bloomberg News.
And that seems to be the case in the Asian markets, or in the Asia-Pacific region as well. I'm joined live by Sophie Kamruddin of Bloomberg News, who is joining us from the Bloomberg studios in Hong Kong. Sophie, good morning. The coronavirus is causing investors some concern. Markets in China are closed today, though.
Yeah, that is the case. And as Abigail noted, caution is still very much looming large given the concerns around the coronavirus, as you mentioned. So we are seeing a lukewarm session for Asian stocks, which are trading mixed, with the regional benchmark headed for the first weekly drop in 8 amid thin volumes, with not only China closed for the Lunar New Year break, but also South Korea, Taiwan, as well as Vietnam. And China's mainland markets, they are closed until January 31st, but we are seeing stock futures in Singapore gaining ground, while the offshore yuan is stronger for the first session in 4. This after that risk-off sell-off we saw on Thursday that saw the Shanghai Composite lose 2.8%. Now, Hong Kong is online until midday this Friday, and the Hang Seng has swung to losses down 0.2% this morning, and the H-share index similarly under pressure as we're seeing some of the concern around the coronavirus expressed in markets here. And Japanese stocks are trading mixed, with chip equipment makers among the biggest boosts. The Nikkei 225, though, trading flat along with the topics, with auto names among the laggards. And the yen just trading steady this morning after reaching a 2-week high overnight against the greenback, while bonds across the region are trading mostly higher, with the Aussie 10-year yield slipping closer to 1% as Westpac adds to RBA rate repricing, delaying its call for easing to April. Back to you.
Thanks so much for that, Sophie. Now, on to the global story, and some of you have been asking about this. Chinese authorities have reported 830 confirmed cases of the coronavirus so far, even as the World Health Organization has stopped short of declaring it as a global health emergency. A second case has been detected in Japan, while the outbreak has been reported in Singapore as well. Selena Wang of Bloomberg News brings you up to speed with the latest.
The number of cases continues to rise. You have that case in Japan, first one in Singapore, in the United States, spreading across China, from the very north of China to the south and to parts of Southeast Asia. And the death toll has now increased to 18, with hundreds infected, although some researchers say that number could be in the thousands. Now, health officials say about a quarter of the people infected actually end up developing serious disease, though the majority of people have had a mild response. And a significant portion of those who have died did have pre-existing health issues. Now, the World Health Organization was actually very split on whether or not to currently qualify this as a public international health emergency. Had they deemed this that emergency, they could have recommended some global travel bans, restriction of some trade of goods, but they were very careful to say that they're monitoring the situation very closely and could change their decision at a moment's notice and reconvene. They are being very careful in the way they're phrasing this, given that they have been criticized in the past for either sounding the alarm too early or sounding the alarm too late, as was the case in the 2014 Ebola crisis.
Selena, at this time of year, you would typically start seeing railway stations, airports packed with people looking to travel home or to holiday destinations for the Lunar New Year. This year will be different.
It's normally called the world's largest human migration, with hundreds of millions of Chinese racking up some 3 billion trips to participate in these festivities with families. But here in Beijing, festivities have been canceled, as well as in Hong Kong, as well as in Macau. Other cities are trying to limit public gatherings, limiting those holiday festivities that could increase the spread of this disease. Of course, Wuhan is also in essentially a lockdown, as are some of the neighboring cities, in terms of banning outbound travel. But there's been a lot of criticism, actually, from some health experts as well as Chinese citizens online, complaining that this lockdown may not be effective, given that there was a rush of people to try to leave before it went into effect. And there's also been statements that perhaps this ban has already passed the golden period of trying to prevent the spread. Locals in Wuhan are also posting photos of grocery stores having empty shelves, masks being out, of people getting turned away from being able to see doctors because hospitals are overflowing. And the situation in China is one of heightened anxiety and fear, with plans being canceled and places monitoring for temperature and everybody wearing face masks on the streets. So the sentiment is not the one of typical Lunar New Year festivities at all.
We'll bring you updates as and when we get them on the coronavirus. In the meanwhile, let's take a look at what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
We're going to start with President Trump, who is saying that he will release his promised Middle East peace plan before Israeli leaders visit Washington next week. Prime Minister Benjamin Netanyahu and his rival Benny Gantz will go to the White House, with Israel gripped by political gridlock. Major issues include the occupied West Bank, whether Palestinians would have right of return, and whether East Jerusalem could serve as a Palestinian capital. Meanwhile, President Trump says he would like to have witnesses testify at his impeachment hearing, but says that some high-profile figures cannot be questioned because of national security concerns. He's reported to be ready to block an appearance by former security advisor John Bolton and other potential witnesses. Speaking at the end of his Davos trip, the president lashed out at his Democratic critics in the House and praised his own defense team. Myanmar, meanwhile, is being ordered to implement emergency procedures, and that is to protect its minority Muslim Rohingya population from attack. The International Court of Justice accuses Myanmar of violating the 1948 Genocide Convention by clearing people out of Rakhine State, resulting in death, rape, and the flight of thousands of people to Bangladesh. Myanmar denies genocide and says it is already trying to restore peace. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Now, Wipro CEO Abidali Nimuchwala is confident of growth returning to the Indian IT industry. Speaking to Menaka Doshi at the World Economic Forum in Davos, Nimuchwala talks about why there is a lot of work left to do to get Wipro back to higher growth levels. Listen in.
Businesses are continuing to spend on technology and transforming themselves. I think now it has become the default and the mainstay. And clearly also we are seeing that these spends are now the prime time spends. These are not, a separate digital project or something. Whatever customers are spending, they are spending in technologies on digital. And the good part about us is we are very strong both in the digital transformation as well as the modernization. Modernization for us is a big area of focus, simply because customers cannot just do a digital front end for experience and design. They have to modernize their back end. The legacy IT systems, the data centers moving to the cloud, the automation, and that is becoming prime time spend. So I am quite optimistic for the next year in terms of technology spend. There is obviously the discretionary spend that happens in the digital transformation piece, which by sector, some sectors are soft, some sectors are upbeat. So for example, banking and financial services, which for us last 3-4 years was in hyper growth mode, we are seeing a little softness in that. Consumer business is good for us, but we need to be watching that. Health and some of the other verticals like utility and energy are only now coming into the prime time digital spend. And I feel that, as that spend increases, we'll see growth in those areas.
You expect growth to be close to what it was for the last calendar year, or do you think there might in fact be a step up in growth, or the other way around?
So, right now I'm not seeing any difference in the demand environment from the last 3-4 quarters.
Okay.
So, I think we'll have to take it as it comes quarter by quarter. We have a very strong pipeline. So if decisions are made on time, I'm optimistic about growth. The question always is how fast these decisions are going to be made and how fast we can start and ramp up. In the medium term, I'm very optimistic. In the short term, we'll have to see how this pans out.
Okay, and in the long term, Abid, if I may ask you a question, for a time now, Wipro has been lagging its peers, whether it's on margins or the ability to grow faster in terms of size. What are you going to do to fix that?
So, Menaka, we've taken a lot of steps. There were two kinds of things. One was some Wipro specific, given our portfolio, given some of our client mix and business mix. And I think we've done a lot of the plumbing work in that. So it's just a matter of time as the growth catches up. The second part is the macro. We work in different industries, and some industries some years do better, others don't.
But that would apply to all your competitors.
Exactly. That's what. Sometimes the mix is a little different. For example, we have a big oil and gas mix, or we have a big healthcare mix. So if something happens there, the impact that we would have maybe weighted more compared to others. But I don't see that too different from others. So I think in the long term, I'm very optimistic. Even in the medium term, I'm very optimistic about us getting to industry matching growth.
Okay, how long will it take? Let me put you on the line for that.
I've not defined a timeline, but you'll see, every quarter we declare our results. For example, in the last quarter, we met the expectations of the street, both with about 1.9%, 1.8%
but you're still lagging growth, top line growth, as well as margins are somewhere between 18-19% versus an industry average of 21, 22, 23%. So I'm just curious as to by when do you expect that you will bring Wipro up to par with your peer group?
One quarter at a time.
One quarter at a time indeed. Now from IT to aviation, and Spicejet Chairman Ajay Singh is hopeful that the return of the Boeing 737 MAX fleet by the middle of 2020 will improve cash flows for Spicejet. Menika also asked him about the financial impact that the grounding of the planes has had so far on the airline's cash on the books. Listen in.
One of the reasons also for a decline has been, or for a slower growth has been that both the manufacturers are having trouble delivering aircraft. So Boeing is having trouble delivering the MAX aircraft, which is what Spicejet was depending on. And Airbus is having trouble delivering aircraft with Pratt & Whitney engines, as well as the 321 Neos.
That impacts Indigo.
So that impacts Indigo, it impacts Go Air, it impacts Spicejet, and therefore, because capacity expansion couldn't really happen, there's been a decline. But I think by the end of next year, you'll see a return to pretty healthy growth. I think it's incredible, and it shows the resilience of the Indian aviation market, that with a large player going out of the market can still return to growth in the same year itself. So that's pretty incredible. So I don't think that the problem really is demand. We expect that aircraft should return to service in May or June of 2020. It's painful. It's very, very painful for airlines like Spicejet, of course. We're doing the best we can, of course.
Financial impact?
Massive financial impact on Spicejet.
Can you quantify it in whatever approximate way you can?
But it's been tremendous. It's been large for the reason that, of course, these aircraft were supposed to be in our fleet, and they are much more efficient and they are cost effective. And instead of that, we are flying these old planes. So there's been an impact. There's no question about it. There's been all the aircraft that we took from Jet Airways those needed a lot of maintenance as well. So certainly there's been an impact. But we are hoping that at least a significant part of this loss will be compensated by Boeing. So we have, we are talking to Boeing on the compensation.
Any numbers you can share with us on this?
Can't share numbers, of course. That is a discussion which is confidential between Spicejet and Boeing. But a discussion is ongoing, and we hope that we can reach a settlement soon. Are completely under control. In aviation, it's an interesting space, and these things go up and down. The cash flow, there are various ways of getting cash for an airline company, and so we have several sources. And as I said to you, we also expect the compensation issue to be settled soon. So we have absolutely no fear that there is going to be a problem at Spicejet. We've lived through far tougher times than this, and we've come out of a shutdown in 2014 and 15. And while this is a challenging time, this is also a time of opportunity. In 2014 and 15, when we were just getting back into the airline, people said, you can't possibly do this without an external investor. And we've shown that it can be done. And we will show you that again, that Spicejet will emerge stronger from this current problems. Market can certainly sustain higher pricing. Today average pricing between Delhi and Mumbai is 4,000 rupees. At 4,400 rupees, everybody makes money. So, it's nobody's case that the market will not bear 4,400 when they are paying 4,000. So certainly we have an opportunity to raise fares and yields. A 10% movement in yield will result in a profitable industry, despite all the pressures that we have today, despite all the taxes that are imposed on us.
Won't it hurt demand, given that we're such a price-sensitive market?
Not at all. You sometimes spend more money on going in a taxi from the airport to your home than you spend on coming from one city to another on aircraft. So I feel that the market certainly will sustain higher fares than we are charging them today. And I hope that airlines are going to be sensible. And in fact, in the last couple of months, there has been more sense that has prevailed. a project that's going extremely well. We have 5 freighter aircraft now, so we have wonderful customers. The business is growing.
Size of the business at this point?
I think we would have done close to 1,000 crores by March 31, and we expect to grow that business significantly in the next year. I think government is extremely interested in selling Air India. Of course, this, as I've always said, this is too large an airline and too complicated an airline for Spicejet to absorb.
All right, let's take a look at how we're set up for trade today. Agam Vakil is here to tell you just that, and also what's happening in the futures and options space. Agam, we've reached the end of quite a tumultuous week. It's been up and down. Yesterday there was again some kind of bounce back in particularly the broader markets, right? How are we looking at the start today?
Yeah, well, again, Alex, it's going to be a hit and a miss, because we've seen mixed cues coming through the course of the last 1 week. It does seem for now that the SGX Nifty is indicating a negative start, but let's wait and watch. As far as trade yesterday is concerned, we did see a lot of strength in the broader market, specifically as evident on your screens here in the mid cap and the small cap indices. The banking indices also saw a little bit of a rebound of about 1% gains coming through. The ADRs right now are also showing, not too much of movement in general. So we're, of course, going to keep an eye on some of the earnings that are coming through. But in terms of fund flows, what we did see was, FIs buy stock worth around 1,352 odd crores on a net basis, and DIs selling stock. Now, the turnovers were quite high, and there was evident that the FIs will come in and buy. We have seen, the Nifty contributors and Infosys, L&T, ICICI Bank, Kotak Mahindra Bank, so a lot of gains coming through. Moving on, let's also address how things are panning out in the futures and options space, and we are looking at short covering for a change in the Nifty futures, unwinding there, and the Nifty banking futures also looking at short covering. Of course, do remember that for the past couple of days, it was seeing fresh shorts coming on. When it comes to the options range, again, a 500-point range between 12,000 and 12,500. But in terms of change in open interest, yesterday we saw a little more writing around the 12,000, 12,100 puts. Moving on to your VIX, that came off below the mark of 16. The Nifty put call ratio also edged up higher to around 1.26 from 1. And stocks, we did see something like a power grid, NMDC, CESC accumulation in open interest. And in terms of declines in open interest, we had a lot of activity in RBL Bank, UPL, and L&T. A mixed day of trade, Alex, yesterday, but the positive was that we saw advances after 3 or 4 straight days. Let's see whether or not that continues today.
Thanks so much for that, Agam. All right, let's turn to Somit Satkar, who's joining me now to tell you all about the stocks in news. Good morning, Somit. What's on your list today?
I'll start off with the earnings first, Alex. HDFC Life Insurance, strong operating metrics, but the margins were a disappointment for the life insurance player. The APE growth was nearly 31%, but the VNB margins continue to come off sequentially. Now, the APE growth was driven by a decent performance decent performance coming in from the NBP and the regular premiums. And if you see, the brokerage UBS has raised its target price on the stock to around 650 from 630 on the back of the strong operating metrics reported by the company in the third quarter of financial year 2020. Biocon, the results were below estimates. The revenue growth was led by small molecule, biological, and the research services vertical. Branded formulation revenue was down nearly 26% compared to last year. Lower raw material cost aided the margins, while the net profit was impacted by higher taxes in the third quarter. Cholamandalam Investment, now weak AUM growth, disbursements growth despite a seasonally strong quarter for the NBFC. The AUM growth further moderated to around 20% from 24% growth rate in the second quarter. Asset quality deteriorated while the expansion plans of the NBFC were also toned down in the third quarter. Zensar Tech, weak results with revenues down nearly 5%. Net profit was down nearly 51% compared to last quarter. The EBIT was down nearly 75%. while the margins came in as low as 2.8%. In other stocks to watch, firstly Infosys, because according to PTR reports, SEBI may probe a whistleblower allegation against the company. Along with that, KEI Industries, because the QIP has opened yesterday. Now the company is looking to raise nearly 400 crore rupees with a green shoe option to raise another 100 crore rupees. Now the SEBI calculated floor price for this QIP is at 518 rupees, while the issuer can offer a 5% discount to this floor price. So if the company raises nearly 500 crore rupees at the issue price, at the floor price of 518 rupees, it will lead to an equity dilution of nearly 10.8% stake on the expanded equity base, according to our calculations. Electra Green Tech would also remain in focus because they have received the letter of award for deployment of nearly 555 electric buses from 8 city and transport authorities. And lastly, Indiabulls Housing Finance, on the back of Bull deal, where Credit Suisse has acquired nearly 22.9 lakh shares, that is 0.5% stake in the company.
All right, thanks so much for that, Somit. Now, UltraTech Cement is likely to report a strong operational performance in the third quarter. Volume growth, however, is likely to remain subdued. Nikki Mirchandani takes us through what the street is pricing in from the cement major.
We're expecting good set of numbers coming in from UltraTech Cement. Well, if you look at the top line performance, we're expecting a 17% growth there, and the number which is going to be a little northwards from 10,300 crore. Also, we're looking at EBITDA performance, which is expected to be 45% higher year-on-year basis. Profitability of the company too is seen higher at 783 crore as compared to nearly 449 crore. Few key parameters that we like to keep an eye out would be the sales volume figure. Now, that number year-on-year basis, that's expected to go a little softer, as much as 2.8% on account of weak demand that we've seen, and also the low production from Century assets. Apart from that, EBITDA per ton performance, that is also one number that we like to keep an eye out. On standalone basis, this number is going to be around 1,000 rupee per ton, as compared to 669 crore that has been registered by the company in the corresponding quarter. Overall, in the larger scheme of events, despite the volume growth slowing down for the company, we're still expecting good set of numbers operationally from UltraTech on account of cost initiative measures which are expected to be taken by the company. Apart from that, realization too is expected to aid the performance. The lower manufacturing cost, which is a combination of both power and less raw material expenses, they are expected to lead to a jump up in operational performance of the company. Petcoke pressures, they're expected to ease off in this quarter year-on-year basis. Also, we're looking at stable cost, which in turn is expected to lead into a good set of quarter for UltraTech Cement operationally.
Now, JSW Steel is expected to report the lowest EBITDA since 2016. A decline in realizations is likely to also impact earnings. Nikki Mirchandani is standing by with what the street is pricing in.
For JSW Steel, we're not expecting a good quarter as a whole. If you look at the EBITDA performance, that is rather expected to slow down. It's the lowest level rather that we're expected to see from Q4 2016. If you look at the top line growth, first we're expecting a downtick coming in by 12% year-on-year basis for JSW Steel. EBITDA performance, as I just mentioned, that number is expected to come down by 43%, and margins are expected to contract to 15% as compared to 23%, and profitability is too expected to take a hit. Also, we're looking at some amount of traction coming in on the volume front. However, we're expecting a 10% uptick coming in on the sales volume. Standalone, there is an important number out there because most of the contributor right now is the domestic business for JSW Steel. Sales volume is seen by 16.9% domestically, and EBITDA per ton performance, keep an eye out on this one because that number we're expecting a figure which is going to be around 6,850 per ton, which compares to nearly 13,800 that we saw in the corresponding quarter. Now, it's a combination of two things which has essentially weighed on the earning performance of the company. First is going to be the lower realization because of the HRC prices, and also the losses that we see from the overseas subsidiaries. The two factors combined put together are expected to weigh down on the operational performance of the company. Now, why realizations are expected to be lower? As I just mentioned, that HRC prices, they have declined by as much as 24% year-on-year basis. And also, if you look at the renegotiation which has happened in auto contracts, that is also expected to play a part in terms of realization. Operating performance to an extent is expected to get some sort of relief coming in from the easing cost pressures because the coking coal prices have went down, and so is the case with the iron ore. But in the larger scheme of events, so we would also like to see 3 to 4 things besides the earning. We like to understand what's the guidance focus now on the acquisition pipelines and also update on how the company plans to ring fence, the newly acquired debt from the books of JSW Steel. And also we're also going to be looking in the Dolvi expansion, whether or not that's panning out in time, and the kind of completion that the company has initiated at this point of time.
All right, well, that's all you need to know going into trade today, but do stay tuned. There's clearly lots to talk about, and you'll find it all here on BloombergQuint.
Rabindranath Tagore University, formerly known as ISECT University, the pioneers in skill development with focus on creating industry-ready professionals. Join India's premier skill-based university.